intro. Thank you, Tom. But I'm Joe.
Garrett Flasinski.
We work on a team as financial planners, and we can keep this. We'll probably keep it more interactive with a smaller group. But we recently partnered with KW Power, the preferred vendor, back around June time. Figured we'd wait until the end of summer to do something like this, and we'll probably have these on a frequent cadence, maybe quarterly or monthly, whatever people find beneficial. But today we'll keep it very general with what we'll talk about. We'll go through a couple slides or so, see how the conversation goes, field any questions from you guys. Like I said, keep it interactive. Want to make it as beneficial for you as possible, and give you an idea of what we talk about with the people we work with, how we can be a resource for you ultimately, and help answer any questions that you have. So.
Yeah, just to piggyback off of that, so we're financial planners, which really means a million different things to a million people, but financial planners is the fancy title. But really with our clients, we help create just a foundation, financial foundation and financial roadmap for where they want to be and how to build off of that in 10, 20, 30 plus years and beyond. Really the focus of our practice is our businesses are just people in the real estate profession. So people just like you, real estate agents, real estate developers, people that have a big real estate portfolio, mortgage people. So really we consider ourselves experts in this space. And these are the conversations that we have with our clients on a day-to-day basis is just how to structure businesses and just like financial planning one-on-one for everyone. We do have some concentration of clients in like the medical field, financial field, and like attorneys, in particular state attorneys, but really in particular we work with first and foremost just real estate. Like Joe said though, really just want to keep this interactive. I always hated coming to this, sit in the back and just like get briefed at. So we want to answer any questions. Again, we have these slides here if the conversation gets a little stale, but we want to keep things a little bit interactive. So unless I missed anything, why don't everyone here kind of tell us what were you guys trying to accomplish today? Like what were some topics that you wanted to make sure that we hit on?
So I money years, and the change drastically for real estate specifically. And so I am people that initially started out as a sole proprietor that I made money, and I was like, okay, now I'm a single member LLC, and because the way the tax rules were, maybe 2014, 15, I was told you should have left as an S corp and start paying yourself because what you're making is saving money, blah, 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 blah. Then I had an account say to me in 2021 that real estate that's no longer necessary because the rules have changed, they didn't get into that. And I'm like, well, should I still go through all this? Payroll for myself and doing the taxes, or am I actually going to go back to being like this member LLC, simpler, like they're really going to make an impact on me just from our real estate business? And I get asked that a lot too, and I'm like,
these guys. A lot of what Joe and I say is it's gonna be wishy-washy because it does depend. Like you could take the same financial situation or the same real estate agent but still have the same production, and it might be a completely different recommendation just based on their situation. So right off the bat, I'll say it depends. But speaking in generalities, generally speaking, yeah, we do want to set up an S corp from payroll for yourself because you're going to save more money on the back end if you do run a lot of payroll.
I guess
Just another thing that you have to worry about.
Great, but it's necessary.
Yeah, because you could save like what, a few $1,000s on an annual basis just in self-employment tax if you're running
Sorry, quick question for you. I also have an S corp.
Yeah.
But I'm a sole member of LLC. I don't have any employees.
Yeah.
So does it make sense for me to meet with them?
I'm just saying, I'm not.
Yeah.
No, I mean, how are the employees?
No, they're subcontractors, I'm not paying them, I'm not paying people on taxes on gas, they're, that work for me, but they're also contractors and also.
Yeah.
I have with my employees,
Yeah, so single person LLC, S corp though, and then just run payroll for that. So you're the only person on that payroll.
Great.
Anything to add to that?
Yeah, I mean, I would say we always say when you get to a certain revenue and profit is when it usually starts to make more sense.
Yeah.
Because, yeah, generally speaking, usually somewhere in the 100,000 and 150.
100 to 150, yeah.
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 Is where
If it's underneath that, you're probably just, the juice really isn't worth the squeeze, because to set everything up, you have to pay for, like, file the taxes for the payroll. For the LLC, you have to pay the payroll company, and to your point, like, it's pain in the butt to run payroll, so under 100 grand, you're probably not getting much benefit out of it, whereas over 100 grand, 150 grand, that's where you really start seeing a lot of savings. So yeah, generally speaking, that's good.
What would you recommend for people that we have to agree?
Yeah. Then we're just looking at just it depends structurally how you want to set it up. So we work with newer agents that don't necessarily have an LLC. And they're just operating as I would operate as Garrett Flasinski, not like Garrett Flasinski LLC. And then, so KW would just pay me directly instead of paying my LLC. And then really you're still operating as a business, but it's a less structured business. So you're still running all your expenses, like you can deduct your expenses as an independent contractor. You're just not running it through the business, you're running it through yourself. So if you don't make over that certain level, you're probably fine with just running it just through yourself. But I would still probably establish an LLC just to keep it a little bit cleaner. Have a business bank account. Yes, it costs a little bit of money, but you are establishing a business, and the goal for getting into this industry is one, to create flexibility for yourself, but then two, to create unlimited income. So the hope is, yeah, today we might be making less than 100 grand, but tomorrow we might be making 200 grand, 300 grand in the future. So if we establish this stuff now, we can just start adding to it later. Does that make sense?
Yeah.
And Garrett hit on a good point. One of the foundational things you want to make sure to start, no matter what income level you're at, is separating your business from your personal accounts. So you want to have all your income from real estate commissions flowing into one business specific account. And it doesn't even have to be a business account, but you just want to keep it separated from any personal expenses that you have. And then you can pay yourself over into a personal account to help the organization. Definitely. In case you ever get audited, they want some separation.
What if you're, like, so let's say you're a brand new agent, you're making enough money to just get by the personal side. You still say, hey, put the money in the business account, then just transfer it over, and then you get it from there.
Yeah, because you're essentially on payroll at that point, but it's not structured. So you're still paying yourself out of the business account. So to Joe's point, just keep things a little bit separate, cleaner. And again, if you ever get audited, then again, it just makes things a little bit easier. I was going to say something, but I forgot. Yeah.
The business account now, see also rate for feedback on them.
So it's kind of the EIN. Some banks are more like strict than others. Some you can just walk with your EIN or like your ID and you're like, yeah, no problem. Other banks want to see that you have your article information, you register with the state, you have EIN too, and then you have to keep that business every year, federally now and state.
Yeah, I know most part of it, and I know that you have to have all your documentation in front. They don't verify who's going to be in the account, has access to all that.
when I say business bank account, we don't have an LLC. It's an account that we're mentally saying this is our business bank account. It's in your name, but it's mentally the business bank account. This is what I was going to say, and to that point too, you guys also, like, whenever you get paid, all of you don't get taxes taken out. So if you're not on payroll and you're not getting the taxes taken out of it, you need to make sure that you're saving those taxes each pay. So if I get paid $100, generally I'm going to want to save about 25 to 30 bucks into a side bank account. That can be your business bank account. That could be an actual business bank account, just a completely separate account that you're not even looking at and don't have access to. But you want to make sure that you're saving those dollars either for quarterly taxes or all at once at the end of the year, so that when that tax bill comes, we're not just getting slammed with a massive bill that we're not prepared for. We don't have that saved up. So when working with clients, specifically with business owners in the real estate realm, a lot of the planning that we get involved with is, right, we're making our money. What are we doing with that money? Right off the top, we should make sure that we're saving some of that tax. And then what's left over with it? What do we have to use as sort of working capital for living expenses, to maybe hire staff or hire someone else to grow our business or invest back into our business, whether that's marketing or what have you. So what else are we doing with that money to be a little bit more efficient for us? But right off the top, really, a budgeted line item should be taxes. Thank you, of course. Yeah.
If you have multiple LLCs, they're three different businesses. The three different businesses, they are unrelated. You can't have it all under one and just have like the DBAs or whatever. If they are still to have them all as separate as corporations, or and keep it like uniform, or if they got money that comes out of those things, for example, we might have support to the other levels, just like
yeah. So that is very contingent on revenues, employees. Those are the two biggest drivers there.
Yeah, I like I said, I got rid of people like W2 employee that's in 2018, but like literally all of my initiatives for it's going to be initiatives, right? Or something to do out here. So like there was no way. I feel like a big mistake that sort of thing that your money's commission based and how the hell you're paying an hourly employee, especially if they're not doing things that are going to money making activities. I know that that was not say also she's over here on the West with the parent of the dog. Well, let me snatch away your salary if you're comfortable and I'm not right now. And you're gonna be commission based too. Now Brandon made enough money and her commission now I think she's gonna be comfortable with what's gonna be paid and then she had an incentive, right? So I'm never going to never and again the mentality that young people are in now, they don't have a problem with that. Like they're like, oh, I get a percentage of this, like they're more like savvy than like 15 years ago. I just want to work them in, work 9 to 5, get a salary, and they're like these people that you can work with nowadays are like way more open-minded. They like the idea of they like to earn as much as they want, right?
Actually,
yeah. So I mean, I can't foresee myself until like I go to retire and place to like take care of stuff for me, but.
Just give you a paycheck when you retire. Yeah, probably it makes sense for the S corp, just across the board, just kind of getting the form. But again, like I want to know a little bit more, understand each business and the entity.
And you recommend to volunteers to their they do have other ventures. So I think they're like real estate money separate from their Uber or their arts or whatever.
Exactly. Yeah. Again, that's all part. Like we want to make sure that we're creating some structure to your financial plan, because where people get in trouble is they just compile all the money. Everything comes in and it's just one big pot. So when you go to file your taxes at the end of the year, you have no clue how much Keller Williams paid you, this company paid you, that company paid you, where are all my expenses? So if you keep things a little bit separate, that's just going to help you, again, from a structure standpoint, from a scaling standpoint, and then when you go to file taxes, really that's going to just make your life way easier, or whatever account you use, because then you can just give them all the documents. Right?
Yeah.
Questions or do you want to maybe hit on a couple of these points?
Yeah.
Yeah. Yeah.
And so I'm a co-chair, so I have agents and I'm chair, so I
Yeah.
have people, and so I'm asking questions that they should be asking, but they might not even know to ask the room.
Yeah.
So, especially with newer agents, right now, they're looking at you saying, "I'm running down money coming in."
Yeah.
What we're talking about right now, and how do I plan for money I don't have? So like that's probably the pump that they're in, and you know, one side I get, you know, settlement, I'm getting finally after however many months, $7,500 check was about the average for here in the city, right? And here's something I can put X amount away for taxes, that doesn't seem realistic.
Yeah.
So like, we want to talk like in very realistic terms. What is advice like you would give your child or your brother? That, you know, someone in your family that is literally in this scenario, you know, in reality, like this is what we're dealing with. So, like, how do you financially plan?
Yeah. Yeah. I mean, a lot of our recommendations are cash flow based. And if we don't have the cash flow behind us, then we need to go back to square one, and we need to. Point one here is budgeting and cash flow. So where's all your money going? Where are we spending our money? And if we're making $10, we're spending $11, or if we're making $0 and we're spending $11, well, how can we, from a budgetary standpoint, maybe come back or save a little bit on the back end from our expenses, so that when we do get a good commission check, we can put it in these certain places like a tax bucket, because we're going to owe that eventually. And bring into the future to the present, if we don't set aside taxes and we make $10 and we spend that $10, and what's going to end up happening is come tax time, the IRS is going to say, all right, you owe us this money. Then 9 out of 10, what ends up happening with our clients that don't end up saving those taxes, they then need to go on a payment plan. Then what happens? Well, now our expenses are higher because we're paying the IRS this monthly bill on the payment plan to pay off the taxes, to make it even harder to pay for the taxes the next year. So it's kind of this like hamster wheel that's really tough to get off of if we don't just start with the basics. So the basics when planning for someone is really point one. It's cash flow and budgeting. Everything stems off of that. How much money's coming in and how much money's going. We need to make sure that our dollars are more coming in than going out, so that we have a little surplus, so that we can at bare minimum save for taxes. But to your point, if you don't have any money coming in, then you need to work with the team here, right, to figure out a game plan to make sure that we do have money coming in. How can we get our next sale? How can we generate, build up our business that's at least going to generate like a substantial, say, a livable wage for us over the next year or 2 years, just to get up and running and our feet wet. And then from there, once you build out your network, then we should be a little bit more in a better position to focus on some of the other stuff. But really, first and foremost, it's cash flow based. And then kind of everything else will take care of itself eventually once we do start making a little bit more than what we currently do.
How much should an agent save over 10?
Yeah, typically it's like 25 to 30% of their pay. So if I'm getting paid $10, it'd be $2.50 to $3. Because that's generally speaking what your tax liability is going to be. Now again, it depends. Like there's deductions that go into that, so
That would be on the safe side.
I think on the safe side. Yeah,
Because we are a single month, and we can, right?
yeah. True. Yeah.
So for like newer agents, going to talk about like the importance of like keeping track of your business expenses. For if you're a new agent, you start an LLC, that's right, and then you're doing your taxes. Most important to keep that in mind so that you know.
Yeah, 100%. So I don't know how many people work with an accountant in here, but definitely being in a 1099 commission-based business, you probably want to start talking with an accountant and have one that you have a relationship with. And one thing that they're going to ask for is that you're keeping good track of your business expenses. So that's everything that's going to be the cost of gas, marketing dollars, really anything that you're paying for, licenses, mileage, things that go into what you're doing as a real estate agent. So they want you to be able to come back at the end of the year when you're filing taxes, and be able to show them, hey, here's what I spent on certain areas, and then he can show you what you get a tax deduction for. You probably want to use different technology tools that exist out there. One is QuickBooks, for example, where you can link up your bank accounts to it. So going back to having that separate business account, so you want to link up the school to that account so that it can help break down what these expenses are for to make your life a little bit easier. Tracking.
QuickBooks is probably the best out there, but I mean, you can keep it basic with just like an Excel spreadsheet.
Yeah.
Saying I drove X amount of miles this month, I spent my money on X, Y, and Z. So you can break it up that way or get a little bit more detailed with QuickBooks.
If you're running a financial spreadsheet, that your resources drive is great. And
I was just gonna put out like 7 months and
Yeah,
that there are some other traffic miles.
Yeah. yeah. What did he ask? What's
like,
Mile IQ? Yeah, yeah, yeah. Yeah, and that's Mile IQ is nice because you could just swipe left or right? Like personal or business.
You want to do it the manual way too.
Yeah, like if they go to the gas station, they're going to tell you which gas. If you go and get like business cards, they're going to tell you what something is. So
Yeah,
You can definitely do that approach, especially early on.
yeah, both minimal pay, right?
Yeah.
I don't like that. I don't like. That's
yeah. When we were driving a lot before COVID, it used to be a big pain, but now we're not. You guys are.
fine.
So we, so separately, we look at as far as the money coming in, that's the other thing, and obviously, well, for me, I want my money to work for me.
Yeah.
What I don't want, obviously, a savings account, not really that much interest.
Yeah.
I have some money in CDs, which is more like 4.6%
Yeah.
interest rate, what would be a good way, because the money that I do have that's sitting there, to have it work for me and generate some,
Yeah.
make it work for me.
Higher yield savings account. There's a lot.
That's we haven't seen this in CD.
As a CD, yeah. But you're not locking your money up like you are in a CD. So CD, you have to like has a maturity table on it, 6 months, a year, 18 months, whatever it is. In a high yield money market account, you're not locking your interest rate in like you are in a CD, but you're not locking your money in.
Is it the stock market? Is it the stock market or?
It's high yield savings account. You have a name.
Yeah.
Well, yeah, it's not stock market based. It's just It's just savings based. And exactly, it's going to be 4.5, somewhere in the ballpark of your CD. Now the thing with your tax account is you really don't want to expose that to any stock market risk. Here's the reason: because if come tax time the stock market tanks, then you just lost a lot of your stock or your tax bucket. So like going back to COVID. COVID hit March of that year. So people were filing their taxes around that time. And once COVID hit, the stock market, just the bottom dropped out of it. Now it came right back months later after the tax season, but the bottom was dropped out of the stock market. So if I had all my tax money sitting there, I just lost a lot of it. So now I have to come out of pocket for a lot of the remainder. So generally speaking, for something short term, probably a year or less, we're probably just putting in like a high yield savings account, just trying to get whatever interest rate is out there. Now anything else, if you're looking for like 3+ years out, then you can get a little bit more aggressive with it, to try to actually have your money work for you, as you mentioned.
How would you do that?
There's a lot of things out there for it. And it really depends what the purpose of the money is for. So if the money's for retirement for you for the long term, we're investing in either a Roth IRA or even something for your business. So if you do have a business, even if you don't have a business, you're just an independent contractor, you can open up business retirement accounts and retirement accounts. And there's pros and cons to each retirement account. But so let's say, again, I make $10, I save $3 towards taxes, and my expenses are only $5 on a monthly basis. So I have $2 of a surplus to figure out what to do with. If I already have my tax bucket and short-term reserves situated, well, maybe I'm taking that $2 and I'm putting that towards my retirement. Or maybe I'm splitting it up. Maybe I'm saying, hey, listen, I'm taking $1, putting that in real estate and starting to build my real estate portfolio up, and taking the other $1, putting that towards retirement. So being a business owner, though, like all you are, you have access to many more retirement plans and options than any other W-2 employee has.
Just answer to percent of that, like we get, is there any, like for realtors, as far as like I'm coming from a job where I have a salary, benefits and stuff like that, and now I have none of that.
Yeah.
So all that money that they were allocating in certain areas that are covering me, I don't know what's to do.
Yeah.
You know what I'm saying?
There's not necessarily discounts, but you're not necessarily going to get charged. You're not getting upcharged for being one person. So the big companies, like Apple, Google, Facebook, massive, they're getting discounts quantity, where if we're a single person, just single entity, we're not getting the massive discounts that they're getting. But for you, relatively speaking, like you're not getting charged a lot of money for having that account. It's generally speaking, whatever you're invested in is what you're getting charged. So it could be a higher costing fund, it could be a lower costing fund, there could be some management fees on it. It really just depends on what we're investing in. But we're not, it's not a massive barrier to entry for someone like yourself to set that up, as far as cost.
Nice part about working at a big company is usually the employer match or whatever money they go put in for you, right? That helps kind of advance your retirement account a lot quicker. I think a nice part for realtors when you set up your own business account is that you're usually eligible to put more away, but it's your own money that you're putting into the account. So you're not going to have that employer match, but usually you're able to put more money away than someone who just has a normal account.
Which equals more tax deductions. So the more money you put into these accounts, the more you get to deduct on tax money. So the less you're paying taxes.
So dealing with agents and independent contractors, no 401k or anything like that. kind of investing have you seen has been most successful long-term for agents?
Yeah.
Like,
Outside of
Sorry.
standing.
yeah, like is it investing back in real estate
Yeah.
or, yeah, like,
We have some realtors that want nothing to do with real estate. They're like, hey, listen, I sell real estate. I don't want to be in real estate. Yeah. So, but it's for not for everyone. But so I mean, we're a big believer in real estate. So if we get a client that loves real estate, awesome, let's put a bunch of money into real estate. But
Are you like a REIT, or are you talking like
just like build a house, building, you name it. Yeah.
Interesting.
It depends how you're investing in a REIT. But again, there's a lot that goes into it. But yeah, I mean, they can be a good tool. But the issue, lumping everyone together here. The issue with realtors is a lot of realtors, they just want to be in real estate. So there's two spokes to it. Some people don't want anything to do with it. Others are like, this is what I know, this is what I love, so I'm just gonna bet all my money into this. Why that's a problem is because there's no diversification in your portfolio. If something happens to just the real estate market in general, just like '08, no one's buying houses at that point. So your income gets cut, plus all your assets just appreciated a bunch all at once. So generally speaking, what we're talking about is, yeah, real estate's a great asset. If you want to be in real estate, let's invest in real estate, but it shouldn't be the end all be all. It should be a spoke on the wheel. So these are your other options that are available to you. And as far as the other plans, typically, like there's a bunch out there, but if we're opening up a business account, it's either a single K, which is a sole proprietor, just a single member LLC version of a 401k, or a SEP IRA, which is similar concept to 401k, but the employer can only make a contribution, not the employee. 401k is a single K, an employee and an employer. So if I'm a single member LLC, I'm the employee and employer. I can make a contribution on both ends. So depending on how much you make, it's just depends on the situation. You might be able to save more in one versus the other. But those are the two big ones. Outside of the business, there's things like those Roth IRAs that you were alluding to earlier. If we're just saving for retirement. But if we don't want to save for retirement, let's say we're saving for house purchase in the future, maybe we're looking at like a brokerage account, which essentially means, hey, listen, we can take this money out at any point. This isn't a retirement account. It's completely liquid to us. There's no tax benefits for it, but it's liquid to us.
It's not the same like even those assets like what stash, AIM, stuff.
Yeah.
The green.
Yeah, they're similar.
So is that more essentially brokerage accounts, but you're like managing yourself with no knowledge of that, like as far as do yourself versus coming to you guys and being like, hey, you know, with all your I didn't understand, right? Because I don't understand about those accounts because I think I have one that I haven't
Yeah.
It's the thing, right? So that is retirement, you know, then I have as a supplement, but then I have and it never has about me, and like I don't like to complain about things I don't know enough about, but I this back I've had to come for like 10 years. It's literally not my socks off. I'm like, you know, my money, we're not. And these decisions, like if you guys, like for example, if you have a brokerage account with the Morris, where you guys like, is it a group of humans and of the financial company, like your company, that sits around and decides what's the best move to make, or are we just trusting our individual agents to the right thing by us? So this is our money. What is actually?
Depend. I don't know your specific account. You could do it pretty much anywhere though. You could just have like a robo advisor where they're kind of just either tracking the indexes or buying like value stocks. You can do it that way. You can track just an index. So like the S&P 500 is a big index that people use to track the stock market. You can just invest in that. You can't invest in the actual S&P 500, but stuff that tracks that. Or you can have someone like us or a group of people actually look at the account, make adjustments, or tactical decisions.
Oh, like retired guy 10 years now, I'm spending $2 a year. What's the rate? If I give you all my money, $5, it's better, right? So how does that look with you and your company then? Like, and I literally have this like obsessive demand. I don't know, it's a money, and I'm trying to get $4 every year. And this other guy that or is it a group like a team member? Do you have like someone that's overseeing decisions that you made and stuff like that's fine. That's the part I feel like nobody wants to ever answer for me. And that's why I'm just letting it sit there like, well, if it's sitting over there, I'm not touching it. It's better than we pull it all back. So we just let it sit there for a minute. So I have time to figure this the hell out.
Yeah, so if you're investing in us, we're not the people like actually innovating the stocks. We'll sit down with you and say, hey, listen, this is how your account's doing. And this is the portfolio construction. We'll track all like fund managers and monitor everything, but we're not actually picking the stocks because that's what 1:30 on a Tuesday. The stock market's open. We're sitting right here. We can't track anything. A little bit, yeah. But yeah, so generally speaking, all right, someone comes to us on money, whatever that dollar amount is, we're hiring a manager, a fund manager to oversee that bottom line. And each fund manager has like different levels that they'll work with. So it's $1 million, $5. Risk tolerance, which is probably why you haven't seen much return if you haven't. Because honestly, over the last 10 years, like it's been pretty easy to make money in the stock market. Everything pretty much is going up.
But like they don't have, like I ask questions and I'm asking, like, sir, you know me 5 minutes, sir. I don't change with a different person, you know what I mean? So like I feel like I ask the question or I say what I would like to see, and it's just like yeah. I'm like yeah. I mean, until you don't exist in my life anymore. I'm like, yeah, you know what I mean? But I'm busy, so you know what I mean? Like busy ladies, so I'm trying to like. That's
why people hire us. Is people use us to make sure that like these decisions are made on their behalf. Now, generally speaking, we don't make any decisions without talking to all the parties. But that's why people hire us. People come to us because they're busy. They're running. You guys are running around doing a million different things on a day-to-day basis. You guys don't want to worry about like stock market stuff, any of this financial planning stuff. So people hire us to take this off their plate, make a lot of decisions for them, recommendations. And it's just, at the end of the day, it's just a second pair of eyes. So if we say, hey, listen, you're doing this, we think you can do a little better doing this, then it's just a second pair of eyes, just kind of overseeing, looking at what they're doing.
I know one basic common rule way they thought we would do is you're going to stocks, hit stock and stuff that you purchase, right? So if you like that, buying tonight. Your favorite car was Volkswagen owns some top end luxury cars. So you're actually buying into their entire thing. You can buy into the individual company, like you got or whatever. But if you want to buy into like the main car, that's a Volkswagen owns one of them owns it. But yeah. So I mean, like, rolling that. Another one is something that's been around for over 50 years. It's like an airport, Exxon Gas, or the one that is ours.
I know we talk about it, the gas station, but the 66 is the James brand at Walmart.
Oh, independent 66.
Sorry.
But stuff that have been grown stable for a long time, even certain food and investment companies. Those are good starting points.
We have two companies in house that you can invest in because they opened up shares for us. Our title of the insurance company. That actually, I made more money in. Yeah, all right. Our title company, I made more money on that and being an investor for the last 6 months than I did in 10 years for the chunk of cheese that I still want to. Yeah.
Not speaking bad of you, but
That's why I say it's
yeah.
But
No, but really, if you do decide to work with us, though, like before deciding working with us, not working with us, we typically like to just debrief your financial situation, but then also personal situation, what your goals are, and just kind of go through everything. So where are you at now? Where do you want to be? Are there gaps in your plan? And does it even make sense for us to get involved? If you're doing everything right, keep on doing it. If not, or maybe course correct, make some adjustments, then let's do so. But typically we'd like to have just an initial conversation just to kind of hash everything out first. And then from there, then we can decide next steps. Because maybe everything's going completely fine in what you're currently doing. It's just
just know that when you like, I say to you, I don't like this little bit of money here. Let's do better. Like, what can we do?
Yeah.
I'm like, I'm telling you, it's not fine.
Yeah.
Like right here, I feel like if you treat like it was white or something, and I'm listening like that. Oh, I'm telling you, it's not fine. So you're lucky I'm just busy. So.
Yeah, I'll say this, and I have nothing to do with it all the time, but I think I've been working with pest control since 2019, and we said, had the initial meeting together, so the budget and stuff, and the budget 2020, say maybe 2022, I made a transition from being full-time at the TV at Market Center to not jumping right back into sales yet, to coaching. So there was about 9 months where I had no income. However, I had pretty good savings and invested accounts that I was actually able to kind of jump into and take care of some things. So that really worked the conversation and already know that.
So, why do you think about investing in crypto money?
you must be asking for a reason. We have clients, same thing with real estate. So they love crypto, they hate crypto. It's or want to get into it, don't want to get into it. If you want to get into it, it should really be no more than 5% of your portfolio. So if you had $100 saved up, $5 of that, fine, let's put it in crypto. That could be our spec position. We're hoping it goes up, but if we're fine with losing this money, so be it. There's probably a place in it. It's in everyone's portfolio, crypto and just like tech space, AI, just that end of everything. But just like anything else, it shouldn't be the end all be all. We have clients that are heavy into that space. We have clients that have made a ton of money in it, and luckily they were in it while they got the upswing. They were in it over the last few years. They hit the downswing and have lost a lot of money. A lot. So if you're fine with taking on that risk, okay, we can talk about it. 5% of the portfolio can be in that. No more than that, though. Especially for you guys because you don't have a stable income. So your income is more spec. We want to try to be a little bit more conservative. It doesn't mean super conservative on the investment side of things. But that was a wishy-washy answer to your question there.
Yeah.
there's a time and a place for it. If you want to get into it, it's fine to get into it. We have some exposure in crypto. That doesn't necessarily mean we love it, but it is like more of a spec.
Okay, so let's just say I'm gonna have $1,000 investment.
Yeah.
Would that, first of all, would that be enough to get a little portfolio going?
Yeah.
I know there are some maybe that people want to deal with you unless.
Yeah.
About this.
Yeah, so really when people come to us, we work first and foremost in a financial planning capacity. So we're going to lay everything out, then we're going to help with business structures, we're going to help with just budgeting, everything on this list here, budgeting, cash flow, tax planning, just everything, soup to nuts. All the investment stuff is just extra. It's like, all right, we can kind of back into that. We do have some clients that say, hey, Garrett, hey, Joe, listen, I just want to invest this $1,000 or I just want to set up like this insurance policy. That's fine, we'll do it. But we really want to know more like about your goals, about your objectives, what you're truly trying to accomplish. That way we can make the most educated decision and the best recommendations for you and your financial plan and family, really.
And then do you charge a percentage? Is it like maybe?
So if we're doing a financial plan and building that out, we're typically charging a fee for that financial plan. The fee is based on the scope of the work and the complexity, really. Ultimately, how much time is involved for putting that together. If we're just doing investments, then yeah, it's just like a percentage of the asset. If we're just doing insurance, that insurance company would pay us a commission on the back end for using whatever company we use. So that is, by the way, I know we talked about this beforehand, insurance is a big part for you guys. Like you were saying earlier, you don't have any employee benefits through working here. So whether you're on a spouse's plan or if you're on an individual plan, you need to make sure that you have those health insurances in place, you have life insurances, disability insurances in place. So going back to foundational pieces like budgeting, like savings, tax buckets and all that, insurance is a big piece of that. Because we can do all this planning, but if you spend a night in the hospital or aren't able to work for an extended period of time, that's just going to derail a lot of stuff. Right? We didn't really touch on much of this. We have all their contact info though, right? We'll send, so this is actually a book that Joe wrote. We'll send this out. That goes into like more details about everything. But again, this is what we talk about on a daily basis with all our clients. But yeah.
When we send it out, if you have any questions on anything you read in there, send us an email.
Yeah.
And you guys would send that, I do best.
Yeah.
So.
Yeah.
Yeah.
Get that over.
Okay.